Hello friends. In our last video, in a Bank Nifty discussion, we had tried to share our view that somehow 38,300 may act as a strong resistance, and if at all bulls are not clearing that, we may see a downtick. Accordingly, we saw more than 900 points downside from the day's high to the low made. But the good part was, again, closing came near to our previous day trading session, that was near to 38,000 or so. Now let us try to study hourly chart and daily time frame charts and try to analyze what can be the road ahead for Bank Nifty. As expected and mentioned in our last couple of videos, we had said that we are expecting this divergence may come into the picture. Also with some adjustment, if you people remember, we had shared our view that a bearish wolf wave structure is in formation and we can expect some more downside. If we consider this bearish wolf wave structure, then as per this, we can see that the first target that was about to get achieved is been already done. Ideally in the wolf wave, lower trend line is considered as a first target, and then target expectation on the cross trend line is our second target whenever that gets touched, or whatever the momentum as the case may be. So our first target was done as per our wolf wave structure. Bearish structure or a bearish divergence also did its job, and accordingly we can see that a downside momentum was seen, but a quick bounce was also seen from that level because of a trend line. At present we can see that RSI average is hinting on the downside, but the candle structure or candle that we talk about is a doji in the nature, that means an indecisive candle, or we can say that the bulls and bears had a good fight in the last trading session. So RSI is giving a negative hint, but if we see Fibonacci retracement, then we can see that somehow flashes near golden Fibonacci ratio were made, but then a bounce was also seen. Now for today's trading session, yesterday's trading session low shall play a crucial role, and on the upside again 38,300 near about levels may act as a strong resistance. We have not considered that a swing is changed, and accordingly we are not changing our Fibonacci for a reversal move target, or you can say resistance levels. That may get cleared probably after today's trading session. Now if we see 1 hour chart, then on hourly chart a good bounce was seen from the lower level, which is really a phenomenal job done by the bulls. And accordingly if we see RSI, then RSI is also has given a crossover on the downside, crossover on the upside, and now at present RSI average is under no trade zone, so we shall ignore that as a whole. In fact, after a good downtake, small bounce was seen. Now our eyes should be glued on at present resistance at a higher level at 38,300, and above that at 39,000 or higher levels. But first we should keep an eye on 38,300 and near about level. If we see it on a 15 minutes time frame, then with some adjustment we can see that a kind of inverted head and shoulder formation is in progress, and accordingly some bounce can be seen. In fact, if we see RSI average crossover, then in that case as well we can see that a up move may come in provided bulls are in capacity or clears our 38,300 near about levels. At that point of a time, 15 minutes RSI and 60 minutes, that is 1 hour RSI, may play a crucial role. If we see on a 15 minutes time frame, then our Bollinger Band flow is about to get changed from a downtick to probable uptick or upside momentum. All depends where we open today and first 15 minutes move, what bulls and bears are trying to do in the first 15 minutes of trading. Same thing if we try to check on a hourly chart, then still middle Bollinger Band is yet to get cleared, so we can expect that it may act as a resistance going forward. As per that, if we try to consider and find middle Bollinger Band value at present, then middle Bollinger Band value is again coming near to 38,300 near about levels. Now if we consider option chain data, then as per option chain, max pain is at 38,000. That means it is near to our close. Big move can be expected with a tug of war between bulls and bears, but ultimately at present max pain says that our expiry may take place near to 38,000 as a whole. On a lower side, if we see 38,000 is having a highest OI, so it will act as a support. In fact, we are really very near to it, so blind conclusion of 38,000 acting as a support with a max pain at 38,000 may go wrong, and if any trade is taken according to that, may result into unnecessary loss. Now if we consider further 37,500, then it is also having a good OI. So comparatively we can say that 38,000 and 37,500 is acting as a strong support going forward, and if at all prices come near to this level, then OI and change in OI should be focused at that point of a time. On a upside, we can see that 40,000 is having a highest OI. We shall ignore it as a whole. In fact, we shall try to focus it on 39,000 strike price call option, wherein highest OI is near to, OI is near to 97,000, which has undergone a liquidation. That means chances are really very high that 39,000 may not come soon, as writing or traders have exited their position. In fact, interesting part is 38,000 undergone a huge additions in the last trading session, and somehow there is a good tug of war between 38,000 level for bulls and bears. Max pain is at 38,000, highest OIPE front is at 38,000, highest OI gainer on a CE front is again at 38,000. That means somehow 38,000 is probably a level which none of the parties want to lose on a closing basis. That is what exactly we saw in last two trading sessions. So whole in soul, if we consider, 38,000 may act as a strong level for either side big move on a closing basis. Upside, we can consider that 38,300 may act as a strong resistance. Downside, if we consider, 37,500 may act as a strong support. So whole in soul, we can consider that there is a range of 800 points for the traders or intraday scalpers. PCR data, if we consider, is not giving any clear idea, as it is at 0.58 level, which may confuse traders as a whole. Volume based data, volume based PCR, if we consider, and then it comes at 1.02, which is a neutral, and exact inference out of that is bit difficult to derive. So in the simple words, 38,300 to 37,500 is an easy trading range which one can consider. In fact, if you are a scalper or an intraday trader or a full-time intraday trader or a trader, then you can see our last video in which in less than 20 minutes we had encashed 200 points on a bank nifty with the simple understanding of charts and a divergence theory. You can check that video from our channel. We hope this video is going to help you to prepare your trade plan and trade accordingly. See you soon with another video. Till then, stay safe, take care, bye bye.